Hi everyone. Today I want to give my two big conviction plays for 2025. One of them is P6, which is a little known power company. This is a great way to take advantage of the AI revolution, and I believe it is probably the best value play you could have, given its peers like VRT are trading really at like nosebleed valuations. So this company has traded on the pink sheets until yesterday. The move to the NASDAQ is wonderful as there's going to be more liquidity, smaller spreads, real-time quotes, and just more general public access. The stock's been a little bit weak since its listing. I guess there's some major players that really wanted to get out when there was a bit more liquidity. Definitely not a concern, and I think it does present a really good dip buying opportunity. Other than this wonderful NASDAQ listing, I want to explain a bit about their business. So they have the three core businesses: power systems, industrial, and transportation. With power systems, we're looking at about 2/3 of their revenue. Transportation, about 7%, and the industrial, 26%. Now, why P6 trades at such a reasonable multiple of a P of about 11 is largely because the industrial and transportation have faced quite the decline. We're looking at a decline of about 19% on their industrial revenue and 40% on their transportation. Obviously, hearing those numbers doesn't sound very good, but at the end of the day, their major business really is the power systems. It had a revenue increase of 40%, and it's the higher margin business to capitalize on AI. I think this company on dip buys will really present a valuable way to beat the market next year. So as you can see, the net income is up very significantly. The net sales, not very much. We're looking at a forecast of 3% for this year in terms of net sales. Now, looking at their terrible growth, you may think, well, this company's valuation is low because it's growing so slow. And if you're looking at the whole business, that is true. But if you really dial into the power systems and look at that growth, which is really their higher margin and profit driving segment, you can easily see that this company has great potential. Their net income will really improve, and it can definitely create good returns. A big catalyst that I think will give it a nice price bump is a refinancing catalyst. Their recent uplisting to the NASDAQ creates confidence in the sense that they had a really horrible balance sheet and they were facing insolvency issues. Their balance sheet's improving, and a refinance plan can easily give it a spike in a similar fashion to one made by a stock like Carvana. So with P6 and refinancing, that would clear a really major wart with their insolvency problems, and it could really easily lead to a multiple increase. Their revenue is very, very concentrated, with 45% of it coming from just 3 customers. That is a huge risk with P6. And looking at any company, you're going to find things that don't satisfy you, risks that may point you away from investing. I don't think you guys should look at them too carefully because any good business is going to have some sort of risks. The risk that really strikes me as the most unfavorable is that P6 is partnered with a company called Weichai. And Weichai also happens to be the majority owner of P6. And Weichai is a Chinese state-owned company. I don't like Chinese stocks. It's a tough market, they don't trade well, and this is not a Chinese stock, but given that it's majority Chinese owned and controlled by Chinese, it definitely makes it a tougher investment. I don't think that means it's worth shying away from this opportunity, but it is definitely something to consider. But overall, I do believe this is probably one of the best opportunities to take advantage of AI and power into the next year, given that most of the great opportunities have played out in a significant manner. The next stock for my conviction list of next year is Snapchat. Now, this is quite a tough and terrible stock. Just hearing that name, Snapchat, probably sends a little bit of shivers. Might even make you click off this video, but Snapchat, despite being such a horrible stock, has made great strides in its business. Snapchat was once just an advertising business, and now it is a dual business with its Snapchat Plus subscription. I think a lot of people will look at the stock price or maybe just think of the company and say, well, Snapchat's dying. Their users keep increasing quarter after quarter, as you can see. And not only are the users in love with the company, but they're also willing to pay for the premium version. I know we've heard of like X's premium version, some other companies with their subscriptions. None of them in the media sector are nearly as popular as Snapchat's. Snapchat's has been growing well. They have 12 million paying subscribers. It is not an extremely significant portion of their revenue, but it's definitely growing in a way that it will be. They have a pretty cheap subscription, and it wouldn't surprise me at all if they took advantage and did some price increases into next year. If you think back to Apple in 2018 or so, they were trading at a much lower multiple than now, and while you can say the multiple expansion is due to their buybacks or just due to general market valuations expanding, a big part of it is Apple was really largely a one product company back then. And of course, they had their iPads and their Macs and stuff, but everybody knew Apple was just iPhones at the end of the day. And their diversification into subscriptions has really helped the company, not only in terms of just revenue growth, but just in terms of their valuation being a more diverse company. And I think Snap, with their Snapchat Plus, should be re-rated because of that. If you look at its peers, Pinterest, Reddit, trading at much greater valuations, but these two companies are not much other than an app and a web page. They have a fraction of the revenue and a fraction of the users. Reddit really, it's not too comparable to Snap with it being a recent IPO. You can look at revenue and say, well, its valuation is justified because it's growing so fast. And I want to remind you guys that when Snap was that tiny of a business, it was growing even faster. So with that being said, if you look at the peers, I do think Snap provides the best value in that sense. And I don't want to say that in the sense of, you buy a value stock and you get caught with a value trap. Your stock never re-rates and you never make good returns. Snap has the catalysts to re-rate. So I don't think that should concern you too much. It's traded between a little bit more than 8 and a bit under 18 in the past year. So its current price, a bit under 11, it's definitely not concerning, and it can definitely move up a lot. Now, I don't want to be that guy that just points to a peak and go like, okay, it's going to go back there. There's definitely good reasons why it should re-rate and should increase in price. Aside from Snapchat Plus, Snapchat Plus is the key driver of their net loss improvement, I would say. Of course, there's cost discipline involved. They're handing out stock-based compensation in an insane rate, really. But Snapchat Plus is really helping out. Their net loss improved by 58%. And that's really meaningful because Wall Street is looking at profitability in 2027. And if they were just an advertising business, I would probably agree with that. But based on their subscription business as well, and based on my models, I'm looking at a best case scenario of a fourth quarter surprise profit, but a profit on a more consistent basis in second half of 2025. And my base case is just 2026 profitability, which is still much ahead of Wall Street. And given I'm right, this stock will re-rate in a very meaningful way. Now, this company is really amazing in their stock-based compensation, giving too much, but it's kind of nice that they're mitigating it with buybacks. You might look at the balance sheet and think, well, can they even afford these buybacks because they're losing so much money? And the thing is, their losses are largely due to stock-based compensation, so they're actually free cash flow positive. Their balance sheet's healthy, so you're not worried on those fronts. What is really great about Snap in terms of catalysts is, a lot of these undervalued plays, right? Until a catalyst comes, the stock really never reaches the valuation you'd hope it does. So the main catalysts I want to point out for Snap really, one would just be, the plus growth that I've been talking about, and that causing them to become profitable. But really, I want to dial into this TikTok ban because I'm sure you guys have seen that all on the news, right? And for the most part, I think most people don't actually believe it. You look at TikTok and say, oh, it's such a large company, why would it get banned, right? They passed the ban in Congress. TikTok tried to appeal to the DC Circuit Court of Appeals. They got blocked. And their last lifeline really is the Supreme Court. Now, you guys might have heard Trump say he's going to save TikTok. I don't know if that's true. And, he comes into office January 20th. The ban date is January 19th. He can only do so much given the timeline. And you guys know Trump. He's very anti-China. When he says he saves TikTok, he's going to save TikTok, I don't necessarily think he's lying. But when he says he's going to save TikTok, what I really think that means is he's going to let TikTok get banned. And what that's going to do is that's going to open up the table to negotiation. And then some company or some entity is going to buy TikTok. And then boom, TikTok's back. So is that saving TikTok? Yeah, kind of. It wouldn't really go against his words. And whether TikTok's banned or it's saved, if it's saved as a Chinese company, that's not great. So Snap would really, the price growth would really have to rely on an improved business model or just an improved business in terms of numbers. But a ban or sale is extremely bullish for Snap. A ban, it's obvious why. TikTok's a huge competitor. And some screen time goes to Snap, some advertising revenue goes to Snap. That's obvious. A TikTok sale is also very bullish. And if you guys are unsure why, the reason is because China will not allow TikTok to sell its algorithm. If you guys have used TikTok, Instagram Reels, Snapchat Spotlight, you guys can probably easily say TikTok's algorithm is by far the best. You might think of something and boom, you're seeing it all of a sudden, right? With TikTok being unable to sell their algorithm, even if it gets sold to a US company, what's really going to happen is it's going to be a shell of its former self. It's going to be terrible, and companies like Snapchat will gain a lot off of their poor algorithm. Now, even if the TikTok ban doesn't go in place, the damage to TikTok's already being seen. A lot of creators on TikTok are saying, hey, follow me on Instagram, follow me on Snap, because they're unsure. They don't want to lose their audience, and TikTok might be banned very soon. A TikTok ban, even for a month, just temporary. let's just say they're banned for a month and they're back to operating as a Chinese company. That would still hurt them a lot, and they've said that just a temporary 1-month ban would impact them by about 33% when it comes to revenue. Very, very significant, and it would help Snap gain. Now, I want to reiterate, the reason I'm bullish on Snap is not because of TikTok. It's because their numbers are already improving, and they've already improved greatly as a company. TikTok being banned is really just like a call option. It's something wonderful and a great catalyst that could propel this further and faster. Snap, in terms of risk, I mean, the real risk I would say is your time. This stock could lay dead for quite some time. But ultimately, if you're worried about the stock tanking, plummeting, it's just not a risk to be too concerned of. They got their share repurchase program. It's not massive. It's opportunistic, but if the stock tanks, the company will step in to an extent. Other than that, Snap has had stretch goals get leaked every year. I mean, they haven't been leaked this year, so perhaps things are a little bit different. But I do believe that the leak is intentional, so if the stock gets hammered a little bit too much, I think you'll see a leak stretch goals. And the stretch goals, if you guys aren't familiar, are just Snap's goals, which are almost unachievable. And every time they get released, Wall Street parties a little bit and give Snap some upgrades. Stock jumps. One of the reasons they might have not been leaked this year is because in previous years, they've missed their stretch goals by a mile. So what does that mean? It means they could easily release their next year's goals because they knew they were going to fail this year's goals. But why Snapchat stretch goals may not be released this year is a little bit interesting. Perhaps they just don't want them leaked. But maybe the reason is because this year they're actually on track to meet some of their stretch goals. That's how much the company has really improved. So with this stock, I'm extremely, extremely bullish. I first gave my bullish call on this channel in August at the very rock bottom of 829. Since then, the stock has rallied. I mean, everything's rallied. It's a great call in terms of timing, given that it didn't bottom at the same time as the market. But the stock has not been a momentum leader by any means. It certainly has potential and certainly should improve in many ways. If you guys keep up with Pinterest, you may have looked at their quarter and seen something kind of bad, and you might think, well, how does that affect Snap? Pinterest's main weaknesses were food and beverage. They mentioned other verticals are good. Snap is not too correlated to the food and beverage, so you don't need to worry about that. And other verticals being good are obviously good for Snap. Their 15% revenue increase year over year for third quarter. Nothing crazy by any means, but this is actually without their brand advertising recovering. This is largely just performance-based advertising and Snapchat Plus. So just a slight bump when it comes to their brand advertising recovering would mean a huge bump in the share price for Snap likely. Now, some of the biggest risk with Snap, as you know, is competition. Advertising business is extremely competitive business. We're talking Google, Meta, Amazon, Netflix, all the giants really. And can they crush Snap? Maybe. They have the deep pockets. It means they can innovate, they can do things very quick. But Snap, it's got a good product. It's very sticky. It does taper off a bit as people age, but for the most part, they've been able to replace their leaving users with new ones. So the product, it's really great. And the company is really innovative. As you guys know, if you guys use Instagram, they have their stories. You can send disappearing photos and videos if you want. And who came up with that idea? Snap, They're the pioneer in that sense. And their track record for innovation largely hasn't helped them other than maintaining users in terms of monetizing. You could say, okay, it hasn't helped them, right? But Snapchat Plus is really the change to that. They can finally get a great monetization on their track record of innovation. You see this innovation, and other companies can copy it, right? But how many of them can build the same thing and have people actually pay for it? It's not that simple. So I don't think Snap will get crushed by competition. They've had their fair share of problems, but overly, it's not concerning. Looking at Snapchat, and one other risk I want to point is that they're doing a little bit of a transition. So with these apps like TikTok, they're very simple. You know, you're looking at like two tabs, you're scrolling through. It's a very simple app. Snap, I can't call it a complicated app by any means. You know, you're looking at 5 tabs. But at the end of the day, it is a little bit more complicated. And, you know, we as humans, we have very simple minds. And especially the young kids, they're kind of like robots, right? So that being said, Snapchat is trying to transition to a more simple platform with only 3 tabs. If you guys remember, it was 2018 or 2019, they did a horrible transition. It did improve their revenue, but they lost some users, a lot of backlash. They're going to be more careful with this one, and especially with it just being a simpler layout, I don't think most people will be overly concerned with it. So not something to worry about too much, and I would definitely call it more of a positive catalyst than negative one, although of course it is a risk, right? Any platform transition, how that might affect users or advertisers. But yeah, I do think that this transition will be very meaningful for them, and it will definitely help the stock price balloon. Another thing about Snap is the management. Some people might say it's poorly managed, and in some regards, I wouldn't necessarily disagree, but I do think their management is very ambitious and they're ready to take opportunities. Like TikTok might be banned, and in February, they're starting an increased creator profit sharing program. And essentially, what it is just, it's a call to creators, you know? They're essentially saying, hey, jump on Snap. They want to take advantage of TikTok's potential downfall. It's a great idea. Snapchat, I think if you look at the CEO, you might be displeased, right? We're seeing companies like Pinterest, Reddit, 2 tiny companies, and yet they're both profitable. So why is Snap still losing so much money? You might look at the management and say, well, they're giving out too much stock-based compensation. It's terrible management, right? But I think the key here is really that the management's extreme ambition exceeds that of just, you know, any other CEO. Like Pinterest, Reddit, they're very content with just being a social media platform with an advertising business. Is there anything wrong with that? No, but I mean, if you look to ambition, you can't really say there's much ambition. You look at Pinterest or Reddit, has the platform changed that much? Not really, you know. They're just an app, a web page. You look at Snapchat, right? And you might say the same thing. Oh, well, they're just an app and a web page, right? But you guys got to keep in mind, Snap is making spectacles. And is that impacting the market massively? No, absolutely not. You know, right now, spectacles, it's just in developers' hands, right? But the key difference is they're trying to position themselves for the future. They care about augmented reality and they really care about the hardware. If you look at Pins and you look at Reddit, you see them making hardware? Of course not, right? They're just looking to make a buck. They're looking to make a profit. Now, I'm 100% certain that if Snap cut off its hardware ambitions and such, when profitable, the stock would react better. But when you look at long term, it's clear that Snap has more ambition and they have potential to achieve much more. Pins and Reddit will always just be some mediocre media companies. whereas Snap really might break into one of the largest companies in the future if AR takes off. And that's a big if. So I'm not counting on that by any means. But given their current valuation and so many potential upside catalysts, it's definitely worth taking a punt. And I say this as someone who has an extremely huge portfolio allocation in Snap. So I've made a few videos on Snap. My skin is in the game. I'm not just spewing shit out of my mouth, like I really believe that this company has a really crazy amount of potential. So if you guys are wondering where I might be looking to sell, given that I haven't sold so far and we've seen a decent price increase since I first called it, I'm looking at 1389 to sell. It is about the upper mid-range of where they've traded. It is technical analysis based. I do believe it is some reasonable pivot level. And I would not be selling my whole position. It'd be something like half. And the reason is I wouldn't be bearish by any means at that price, but my allocation in Snap it's insane really. And as bullish as I am, I do want to cut some off at that point. If you look at that and the current price, you might think, well, it's not a great amount of upside, but you got to keep in mind I've been in since essentially the August rock bottom. So for me, it would be very meaningful upside. Don't feel too bad if you're late to Snap, because I think this company it has so much room to run. But yeah, the company, it's just absurd what they've been doing. And the way the market's valuing it, I mean, they had a great third quarter, stock jumped. You look at the price now, it's lost all of its gains from that earnings. And does that make sense fundamentally? Not really. And given the market being in quite good condition, that also doesn't make sense. But I think it's just how the game goes, really. They're running it up slow. I think Wall Street is accumulating quite a massive line. I mean, you can easily track the institutional ownership changes. You look a little bit over a year, and you see that retail holdings have halved. And that's been picked up by institutions. I mean, retail, it's important and it matters in short term. But at the end of the day, we do know that institutions run this game. They know what they're doing. So knowing that retail is getting shaken out and selling their shares to institutions, it certainly is a bullish thing. Now, if you hold this stock, I'm sure you're going to feel a lot of pain. I felt a lot of pain holding this stock, honestly. It moves terribly. Oftentimes, you'll see the NASDAQ rally beautifully and the stock will drop. It's just how it is. I mean, we're going to have to see some of the catalysts, like any of them really, like TikTok being banned, great Q4, any of the catalysts playing out, and this stock will go to likely where it should go. But the worst case scenario, bad Q4, TikTok not being banned, perhaps just operating as normal, it's going to do a number to the price in the short term. Stock might even go back to 8 in a terrible scenario. I don't think it's going to happen by any means, but it certainly could. And that would really be a load up the truck moment. And once again, I want to reiterate, the risk really isn't a loss of capital, even at current prices, because downside, I think it's relatively limited. And even if it does go down, it'll come back up. Like that, I wouldn't say there's any certainty in the market, but that is one of the things that you can basically be certain of. But yeah, any of these catalysts would be great. I would like to see it go up to its highs of at least the prior year. I think that's very possible, seeing it near 18 and even seeing a breakout into the 20s later on. I wouldn't point to the 2021 high or anything of like 80. That's probably unachievable. But yeah, as you guys may have seen, I made a video on Snap before their Q3 talking about how the narrative will likely shift from revenue to profitability. I believe that was the case. And I think there's a very, very real chance that we see a surprise profit in Q4. And the last time they posted a surprise profit in 2021, the stock went up 60% in a session. So a lot of potential here. And that's really it. I could ramble on for hours about my Snap thesis. Really, I think this is just a very, very rare opportunity. But if you guys have any feedback, you guys think I'm wrong about anything, definitely feel free to let me know. The main arguments, people always say the company's dying, too much stock-based compensation. We've went over those. So if you have anything other than that, something more valuable, definitely leave a comment. We'll discuss it. But I think, I beat the market last year. I'm definitely going to beat the market this year too. So me beating the market next year, I think that's a near certainty, really. And these are my picks, so I hope you guys take meaningful consideration into them. I have a couple more picks that I want to talk about later, but the prices aren't right now. So that'll be coming in the future. But if you guys stuck through the whole video, I want to say thanks for listening. And I hope that this video or any of my previous ones have helped you beat the market and make some more money. Thank you guys.